Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So now, the topic of the webinar, as Steve told you, is on trend lines and moving averages. Regarding trend lines, I wanted to introduce trend lines as the topic is about trend lines and moving average. Basic trend line is one of the simplest of the technical tools employed by technical analysts, but is also one of the most valuable. Talking about trend lines sounds like a very basic scheme, but I see a lot of guys who draw trend lines with only 2 points, and we call them a trend line. So it's a mistake for me, and that's why I think to give some precision on how to draw a trend line could be useful. 3 points at least. So 3 points. Okay. 3 points at least are needed to draw a valid trend line. Because if you draw a trend line with only 2 points, it's not a valid trend line, but a tentative trend line position. And it's definitely different because by experience, if you take only 2 points, you will redraw your trend line many times in the future, and you won't be able to see a correct signal on any breakout. It's really important to have 3 points. That's why I insist on this. So that's why it's really important to have at least 3 points to draw a valid trend line. An interesting question regarding trend lines we can ask is how to determine the importance of a trend line. We can say that the importance is defined by the longer it has been intact and the number of times it has been tested. Sorry. So, with that said, the more significant the trend line, the more confidence it inspires, and the more important is its breakout. So, on this slide, sorry, when you have 3 points, 3 impacts, you can say that you have a bullish trend line. So, that we can do after this kind of trend line is to buy when the price is facing the rising trend line, and to take profits or take a short position. Depends your trading horizon. When the price is facing the parallel of the rising trend line, the first rising trend line, the lower boundary, if it's a channel. But we will see afterward. It's exactly so. This one at the top is for a bullish trend line, a rising trend line, and exactly the same for bearish trend line. So we have 3 points, 3 impacts. So you can sell after the third point. Okay, when the price is passing the bearish trend line. But the most important is you can also buy if you break above the bearish trend line, because you have 3 points, so it's a valid trend line. So if you break above this, you can consider that we have a bullish signal, and you can enter a long position. For the next one, I wanted to see with you very quickly channel pattern as channel is a variation of the trendline technique. So it's the same that the last slide. You need 3 points to consider that the bullish channel is valid, it's not a tentative, and you buy at the lower boundary after the third point, and you sell at the upper boundary. Exactly. This is for the bullish channel, and exactly the same for the descending channel, the bearish channel. So that's it for trend lines. So now we are talking about moving averages. The moving average is one of my favorite technical tools because it is the basis for many mechanical, many automatic trend following system in use today. So why, for example, while two chartists may disagree as to whether a given price pattern is a wedge or a triangle, for example, moving average trend signals are precise and not open to debate. That's why maybe it's my favorite indicator, technical indicator. So moving average is essentially a trend following device. I mean that its purpose is to identify that a new trend has begun, or that an old trend has ended or reversed. However, the moving average is a follower and not a leader indicator. It never anticipates, it only reacts. But the best value of moving average, and this is really, really important, is the best point is to avoid counter-trend position in a strong directional market. This is the main point of moving average. For example, on this chart, you can see that we have two moving averages. On this chart, in red, it's a 20 days moving average. In blue, it's a 50 days moving average. You can see that the price is always at least above the 50 days moving average. And these two moving averages are on the upside. So you can see that the trend, the main trend, is strongly bullish because the price never never push below this trend line. So if you have a trader, if you are an investor, you can take any short position, even if you are there, okay? Because except if you have a very short-term trader, but if you never fight the trend, it's the rule. So when you have this kind of configuration, it's too bullish to take any short position. So you try to catch the bottom when the price is very close of moving average, and you wait that the price close below this moving average, or you wait that this moving average are turn down. So as long as this kind of moving average are on the upside, you are in a bullish trend and you keep your long position.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.